When I was buying GameStop in 2019, 2020, I said that it was going to be the investment of a lifetime. And I was right about it. But there is one thing that I regret about GameStop, is that I did not buy more. At some point, it reached 8% of my portfolio and I stopped buying. I knew with a high certainty it was going to be a multi-bagger. I didn't know, of course, about Reddit and all these things, but things worked out. I got lucky in some ways and I saw at the top. Of course, if I'm saying that it was the investment of a lifetime, it means that I have only one lifetime. I'm not going to see such opportunities again. But we have to understand why GameStop worked. It worked because the risk was so low on the stock. Many people believe that the more volatile a stock, the riskier it is. I don't believe so. It was a very low risk company. We are going to talk about this today, and the potential reward was huge. I see the same thing with the stock today that I own, Wise. But of course, Wise is not going to be a multi-bagger in 1 month like GameStop. It's not going to be like this, but it's a low-risk company with a high potential reward. Let's start with GameStop. Why the risk was so low? It's because the company was trading below its net cash value. They had restructured their debt. I saw GameStop as a deep value opportunity. They were repurchasing shares. In 1 quarter, they repurchased 35% of shares outstanding. They were on the brink of a short squeeze. Over 100% of the shares were short at some point, 400% of float. It was inevitable. And then there were activist investors coming, buying the stock, Hestia Capital, Ryan Cohen, all these people. It was inevitable that we were going to see a short squeeze, the next console cycle. There were so many catalysts. But this is what you need when you're investing in a deep value opportunity. You need to know that there are catalysts that are going to unlock the value. This is not the case with Wise. It is not really a deep value opportunity. I would just call it a normal value stock. But it's growing. Unlike GameStop, it is growing. Last week, we talked about a chart that changed my life. If we look at this chart, if we have to consider GameStop, it is a stock you're going to make money in only 1 or 2 years, like I did. And it's because of multiples. At some point, GameStop was trading at the $200 million valuation, which was unreasonable. It went to over 10 billion. So it's just multiples. The earnings did not improve. The revenues did not grow. The margins did not grow. Free cash flow did not change. The market, of course, did not understand how to value GameStop. That was the market was wrong. And the same thing with Wise. The market doesn't know how to value Wise. The market doesn't understand the story of Wise. But if we are going to look at this chart again, Wise is a longer term picture. It's not like GameStop, 1 year, just multiples. The company can grow its intrinsic value through more revenues, better margins, and of course, returning cash to shareholders through buybacks, what they just started doing. And this time I'm willing to go even bigger because Wise is 30% of my portfolio. So why do I believe that Wise is a low risk investment? And by the way, if you want to understand my whole thesis on GameStop, why do I say it was so low risk and the potential reward, all my analysis is free. I wrote everything. Even the mistakes I made, there are things I did not see. I wish I had sold at the time. Of course, we cannot trade anything. I'm happy I make that much money. But the whole analysis is available for free. I think there are over 100 pages there. Please, it's an interesting story to read. It's annotated. I annotated the mistakes I made. Coming back to Wise. Just like with GameStop, the market is missing the story of the company. Here, the market believes that Wise is just like any of the other neobanking app like Revolut, Monzo, etc. First of all, Wise is not a bank. They don't have a banking license like Revolut. They are not in the lending business like Monzo, so they are not a bank. A bank, the function of a bank is to lend money. They don't lend money, they are not a bank. They have some bank-like functions. For example, you can deposit money with them, but that doesn't make them a bank. And secondly, the market sees Wise as a neobanking app, an application. But Wise is more than just an app. Because this is how most people are going to use Wise on their phones. They are going to send money to their friends in other countries. But in reality, Wise is building the infrastructure where money can move. It's more technical. In my analysis, I went into great details to try to understand the things. I'm still trying to understand. You don't have to understand it at 100%. At some point, you have to trust the management that they know what they are doing. And I trust the management of Wise. They seem to be people who have skin in the game. A lot of skin in the game. 20% is owned by the founder of the company, and about I think 22% by the top management and directors, and 5% by the employees who work in the company. So let's say about 30% owned by insiders, and there are other big investors in the company. So at some point you have to listen to what these people are saying to know really they have done their homework, they know what they are doing. And I have listened to them. They have been in the company for over a decade, most of the senior management. What Wise is doing as a company, as a business, they are trying to have direct connections with central banks' payment system. For example, in the US, there's FedNow. There are several ones in the US actually. In Brazil, we have Pix. In India, we have UPI. They don't have connection to UPI yet, but still they have within Japan, in Hungary, in SIPA, in the European Union, in the UK. Most of transactions are going through these direct connections. And it's not easy to get these licenses, to get these direct connections. This is what Wise is building. The reason why sending money on Wise is so cheap is not because of subsidizing. Unlike, let's say, Revolut, Monzo, all these companies, they subsidize. So when you're sending money to your friend in another country, these banks, they have to use the corresponding banking system most of the time. Even if they give you the lowest price, it's because they are losing money. They just want you to send the money on their platform. They will provide you other services in order to make money. But this is not a sustainable business model. At some point, they will have to raise prices. Wise is lowering prices because they can. They don't subsidize anything. So if you are sending USD to euros, or you are sending USD to, let's say, real in Brazil, the price you're paying, this is what Wise can make you pay for them to have a good margin, for them to be a sustainable business. They're never going to lower prices for USD real in order to finance, let's say, British pound USD. It's never going to be like this. Every corridor is sustainable. And when they have a direct connection, they had direct connection in Pix, of course, prices for transactions going to Brazil went down. At some point, it became impossible for the competitors to compete with these companies, and they have to join the Wise platform. Even if you're sending money on your normal banking app, in the background, it is being run through Wise, through the Wise infrastructure. And the more money flows through Wise, the more they can lower prices, the stronger the mode of Wise is going to be. This is why I say Wise is a very low risk company. There's always going to be regulatory risk, but they are doing a lot compared to competitors. Even if we have heard recently the news about Belgium, when you think about it, it's less than 1% of total transaction in a year, and this is over multiple years. Maybe they are going to pay a fine. I already made a video about this. I'm not going to go into details more about this today. It is a risk. But you cannot invest in such a company and say that this risk is not going to exist. It's always going to be here. Otherwise, you are just going to buy US Treasury bonds. When I'm investing in Wise today, I'm not thinking about the next year, what's going to happen. I'm thinking about the next 15, 20 years, how this mode can become stronger. Even the Bank of International Settlement, they have this project to lower prices on sending money across borders. But the plan that they have, Wise is already doing it. A private company is doing it much faster, much better compared to what is essentially going to be a commodity. So at some point, we think that sending money internationally is going to be commoditized. And if Wise can lead that, they are able to control that, just like with Visa or MasterCard are doing. This is a big moat that the company has. And as far as monetizing that is concerned, over 50% of the revenues of Wise already comes beside cross-border. From cards, from business services, from accounts, from interest. And over time, I believe that Wise will be able to provide more and more of these value-added services, just like Visa and MasterCard are doing, in order to monetize the infrastructure that they are building. So you see, it's like a bubble. Both of them have to work. There are companies working on the infrastructure, but they don't really have the app. The app is important. They have to provide the things in order for them to monetize the infrastructure they are building. If you just provide the value-added services without owning the infrastructure like Wise, again, it's not going to work because you will have to find someone to do it for you. And in most cases, cross-border, it's going to be Wise. If you want to learn more about the Belgium regulators thing on Wise, I would recommend you watch this video next. Have a nice day and goodbye.